There is a great crypto repricing happening right now, and Bitcoin may be the only asset that services this rotation. Something has shifted out there. You can feel it before you even look at a chart. Bitcoin holds its line, and everything around it feels heavier. And the mood across the market tells you this is not just another dip or another headline cycle. There is a deeper reset taking shape in the background, and most people only see the symptoms, not the cause. This moment decides who stays early and who gets caught on the wrong side of this major turn, on the wrong side of history. It's the kind of moment that never announces itself. It just builds pressure until the release hits all at once. So stay with me for a few minutes. I want to walk you through the real signals that have flipped, what they hint at, and why the next part of the cycle will not look like the first half. When you see how everything fits together, this entire move starts to make sense. All right, let's start with the first clue everyone keeps overlooking. All right, so let's start off with the first clue that has kicked this whole shift into motion. A lot of people are staring at the December rate cut odds like it's the key that unlocks the entire market. And yes, it will have a huge impact on the market. And we see the probability of it happening keeps creeping higher. And on paper, that looks like fuel. However, the strange part is how quiet everything feels while those expectations continue to rise. It almost feels like the market is waiting for something that is not on the calendar. Or maybe everyone feels like they've been rugged too many times. Who knows? And we also know there is a lot of talk about a huge liquidity release from the Treasury's cash account. Big number, big excitement. But the last time something similar happened, the move didn't show up right away. Liquidity drips through the system, hits a few unexpected spots, and only shows up on charts later. So if the market feels quiet, it's because the story forming underneath is still early. The signals have flipped. Yes, the pressure continues to build. It just hasn't reached the surface yet. And that's why the market is quiet. So now let's move into what the banks and institutions started doing right as all of this has gone live. Wall Street has started building around Bitcoin in a way we have not seen before. The clearest example comes from JP Morgan. We know they rolled out a structured note tied to BlackRock's IBIT ETF. And the design of this thing tells you exactly who they're targeting. Clients will get a set return if IBIT hits a certain level next year. And if the timing plays out differently, the exposure stretches all the way to 2028 with upside and a cushion built in. So this is not some small pilot program. This is a major bank shaping a product around Bitcoin the same way they shape products around blue chip equities. And when a bank does that, it's never for traders living on CryptoX. It's for the slow, steady capital that usually shows up late and stays the longest. And that's not their only move. JP Morgan also described digital assets as a tradable macro asset class. That is the kind of language that moves a whole category into mainstream asset allocation. They're using language essentially that TradFi will find confidence in because they find familiar. And at the same time, regulators opened doors that were closed for years. The SEC issued a no action letter to a Solana based DeepIn project because the tokens serve a role inside the network instead of being sold as investments. So it's really nice to see the SEC is getting more educated and more aware on securities versus utility tokens. And we also see that Polymarket secured approval from the CFTC to operate for US retail users and brokerages. And we see that US Bank has also begun testing bank-grade stablecoins on Stellar. And Klarna has rolled out a dollar-backed stablecoin on a new payments chain from Stripe and Paradigm. So one by one, you see these pieces falling into place. Banks adjusting their products, regulators shifting their posture, and fintech giants testing new rails. And none of it, however, for some reason, makes a big splash on social media. But make no mistake of it, all of this news, okay, will shape the next phase of this market. There is simply a delay. And these moves become even more important when you line them up with what has happened in the AI world simultaneously, because we see that AI is becoming the main character. And it's the force that is catching a lot of people off guard. For instance, the moment Google dropped Gemini 3, I don't know if you've been following AI news, but it's been all the talk, okay? Because people have been saying it's outperformed ChatGPT. Now, I need to give it another go. You can see it built in on your main browser off to the side if you're using Google browser. The last time I used Gemini, I wasn't too impressed, but I am going to give it another try because it has been all the rave. Anyway, with people saying that it's outperforming ChatGPT, there has been a palpable energy change in the market within the AI sector. And Gemini 3 is causing this stir because they use Alphabet's own chips. They use Google's TPUs. And even Meta is looking to use them. So all of this has hit the market at the same time that NVIDIA stumbled for a moment. And the whole story changed in an instant. NVIDIA, we know, has been the face of AI for so long that a lot of investors never imagined another giant stepping into their lane. But this is part of a healthy market. Healthy competition is so good for the market because it keeps everyone on their toes and always improving. So we'll have to see what NVIDIA does next, but I find this all very exciting. So while no one thought that anyone could show up and challenge NVIDIA, here comes Google with Gemini sharing numbers and hardware strong enough to shake the entire narrative. And this kind of moment pulls huge waves of capital with it. Stocks move, funds reposition. You know, everyone's having meetings right now about this. And analysts end up rewriting their assumptions in real time and publishing their work. So their work ends up also moving the market. And some people have started comparing AI to the old commodity markets. Data centers are burning power at levels that nobody planned for, though we do know that as technology evolves, it will get cheaper and cheaper. But for now, compute is being talked about the same way traders talk about oil supply. And when an industry is viewed that way, every move gets amplified. And right now, you can hear the shift in conversations across podcasts and trading desks. More than one investor has said the same thing this month, and that is that they feel more excitement putting their money into AI names than putting money into most of their major crypto assets. The valuations, the user numbers, and the pace of growth, AI keeps setting the tone, and crypto keeps reacting to it. So it's important to know where you fall in line in the market's domino effect. And we know that right now, AI is leading.
The other thing that's cannibalizing at least ETH is L2s. We haven't talked about that yet. Like everybody wants to talk about mega ETH. I think
well, I got specifically flamed for that because
I saw that, Ollie.
people weren't happy by me saying, oh, it's we don't need another L2. The issue is not throughput, the issue is activity. And I do think those two things are correlated, but I don't think that we are bound by throughput right now. And at some point we will be, but it's not right now. But people were coming after me for calling Mega ETH and L2. I read there's this guy Brad who kind of like puts out who's I guess part of Mega ETH, and he sort of wrote a rebuttal to me that I think like I really respect him for trying to engage in good faith, but I think at the end of the day it's still like, hey, like we're trying our hardest to bring people onto our chain, but I can't show you anything that's like actually real that will be used a substantial amount more than the current applications that already exist.
And no, if you're new to crypto, that doesn't mean that AI and AI stocks and NVIDIA are better than Bitcoin. They're in completely separate categories. Okay, Bitcoin is digital gold and AI is infrastructure for the future. So they're different. Although Bitcoin also provides infrastructure for the future, but it's not the same. So don't think that's what I'm saying. Bitcoin is king, and owning Bitcoin ultimately allows you to own your own sovereignty, your own identity, your own freedom. So very, very different conversations. Let me know if you have any comments about this. Anyway, when you see all of this play out at the same time, it becomes clear why parts of the crypto market feel stuck. And that is because AI has become the new growth story. And right now, it's pulling attention away from places that used to feel untouchable. All right, so now let's move into the part of the market that feels this pressure the most. And that is with altcoins and why they feel heavier than Bitcoin. Because I know this is the part of the story or today's show or the main conversation lingering in the air that everyone feels the most saddened, I want to say, and the most stressed out about. And that is with our holdings, right? You open your wallet and all your token investments are so low. It's almost shocking. But this is what I want to lean into because there has been a steady conversation picking up on X and in long form pieces that say that the crypto landscape is changing at its core. Now, if you've been following my channel, you know I've been saying this for some time now. I believe we have broken away from the 4-year cycle. We don't know exactly how long this cycle is or what exactly will happen, but I believe we've broken away because the macro conditions are just so unbelievably, incredibly different that to me, it's just really commonsensical. But anyway, one of the clearest versions of this theory is coming from a thread that describes Bitcoin as the tool that broke open the door for digital assets. And now that door is open, the market is treating everything very differently. Some are even saying that Bitcoin is having its IPO moment, meaning the people that bought Bitcoin in the early days are selling off a little bit while there is enough liquidity in the market to buy up what they sell without tanking the crypto market space, right? Makes sense. But anyway, that's a separate theory. Back to this specific theory, the idea is very simple. In the early days, Bitcoin carried the entire space because it was the only working rail. Every other attempt at digital value got shut down. Stablecoins were a risk, tokenizing anything was a risk. And even holding value in a wallet felt like stepping into unknown territory. Yet, like in all things, things mature, right? And stablecoins grew into hundreds of billions of dollars. Tokenized gold and tokenized stocks became real products, as is our reality now. People learned that assets flow to whatever chain gives them the best mix of speed, cost, and reach. And once that behavior took hold, the market stopped giving every chain the same premium it had a few years ago. Most chains became interchangeable plumbing, a term that has floated around a lot under interoperability, which is still the key to mass adoption and scaling, right? Every chain in crypto has to work together, otherwise, it's very clunky and disjointed and doesn't encourage new user adoption. So, we started to see a crypto space where the asset mattered, the issuer mattered, the user experience mattered, and the chain underneath just needed to work. And that is a tough adjustment for the parts of crypto that grew during an era where every layer 1 or layer 2 could attract huge valuations before proving anything. Investors and builders talked about world computers, global settlement layers, and endless growth. Now, those same networks fight for attention in a world overflowing with block space and new rails. And you can hear this frustration from traders that make up the majority of the market, the 99%. They talk about valuations that feel stretched, fees that fade in quiet markets, and user activity that churns with every liquidation cycle.
One thing that my old boss, Don Wilson of DRW, told me is, when I was asking the same question, which you could have asked during any of the previous cycles with these ridiculous valuations on certain altcoins, I'm like, why is this, how is this token so stable at such a multi-billion-dollar valuation when it's obviously vaporware? Like the team has literally packed up shop. They're not shipping new code. They're buying villas in Sardinia. They're not doing anything. Why is it still worth what it's worth? And the answer I got from Don, which I think is kind of prescient, was, "Hey, Jonah, tokens don't file for bankruptcy. Like these valuations can just be sustained for a while."
Meanwhile, Bitcoin feels steadier. Not perfect, not explosive, just steadier. Times have changed to where it behaves more like a macro asset. It absorbs flows from institutions that want simplicity, and it carries the weight of digital gold, a story that never really left and is actually growing and growing amongst TradFi investors and analysts. So you see the separation forming in real time. Bitcoin holds its role, and everything else gets weighed, compared, and repriced. And this split becomes even clearer once you look at what's happening inside the crypto economy itself. So let's step inside the crypto economy itself, because this part surprises a lot of people once they see the numbers. For the first time ever, the space has companies generating serious revenue, not projections, not promises. We're talking about actual money. For instance, Pump Fund crossed around 100 million in roughly 6 months, and Hyperliquid pulled in more than 875 million in cumulative revenue with a team you could fit in a van. And that is a glimpse of the future, especially with AI. The future teams of the world will be 1 to 2 to 3 people. And we see that Tether brought in around $13 billion last year. Axiom hit 100 million in about 5 months and became the fastest growing YC company of the year. So these companies are moving real dollars every day, and the money is sticky. Hyperliquid, for instance, sends most of its revenue straight into buybacks. You know me, I love that model. And Pump Fund keeps a steady floor of daily revenue, while Uniswap generates around $100 million in fees over 30 days. These are not small numbers. They would turn heads in any other sector. And the strange part is how the market reacts. You would think cash flow this big would dominate valuations, but the behavior this year, 2025, tells a different story. Some tokens with huge revenue trade like niche experiments, and others with flat numbers trade like cult collectibles. One could look at the charts and see price moving long before the fundamentals matter. It feels like the market wants the story first and the revenue second. And this tells us something important about where we are in this cycle. This is the first phase where we see real businesses live inside of crypto, real use cases. Yet the market still leans towards narrative. The 99% of everyone in crypto, this means they still love narrative-driven pumps. So there's room for maturity. Anyway, what we see is that people are chasing excitement. They chase hype. They wait for someone else to bless the idea before they price in the cash flow. This behavior, though, will not last forever. When the market finishes this repricing phase that we're in, the projects that survive will be the ones with actual activity and actual revenue behind them. As I always say, blue chips with real use cases that are solving real problems in the world. So we see the groundwork is already in place. The market just hasn't caught up yet. And this is our advantage. If you do have extra dry powder and you want to allocate into blue chips that have good use cases and that will pump, this next leg of the market, well, those tokens could be good opportunities, but we know the golden standard is Bitcoin. And I will be doing a show on top altcoins with real legs to run this next phase of the market coming up in the next couple days. So hang around for those. Anyway, when we see what is going on and we combine everything that I talked about with what is happening in the broader ecosystem, the next chapter of crypto becomes even clearer. All right, so now let's bring all the pieces together, because this is where the picture starts to form. Because when we look across the space right now, we see a mix of signals that don't line up the way they used to. Altcoins sit in valuations that came from a different era. Times have changed, and block space is everywhere and cheaper than ever. And we see a space where developers are drifting towards AI, robotics, and other frontier sectors, all while whole networks are chasing the same users. And old names that once felt untouchable are getting pushed out of major exchanges. And while all of this is happening, Bitcoin is moving in its own lane.
You just cannot justify the valuation of most projects in the space. And it's a classic Silicon Valley meme of like, never show revenue, always sell the dream. Crypto's no longer the main character, right? It's AI. So from a momentum driven trade, over. From a valuation fundamental trade, over too. Like Ethereum as a $400 billion asset, Avi, Jonah, in what right mind would you buy this when it's cranking out 1 to 2 billion of fees that are not recurring, that are going to dry up in a bear market when liquidity is?
It's picking up institutional flows. It's becoming a portfolio allocation. And it's behaving like a macro asset while everything around it is behaving more like growth stocks that need perfect conditions to stay elevated. And you can feel this type of separation across every corner of the market. Some projects are still fighting for attention. Some are trading on pure momentum. And finally, some are showing real revenue, while some are just fading away quietly. And Bitcoin is staying at the center of every conversation, no matter which way the market leans, which is a tremendous signal of strength to me. This tension is the early stage of something bigger. You feel it in valuations, you feel it in user activity, you feel it in the way investors talk about these assets. It's a slow, grinding reset that moves through the market from one layer to the next. And the deeper you look, it becomes clear that we are watching the space reorganize itself in real time. And this is the part of the cycle where everything gets weighed, tested, and sorted. So the smoke has not cleared yet, but the signals are loud enough that anyone paying attention or tuned in here to my channel can sense and see how these dots are all connecting and lining up and what comes next. Bitcoin is holding its ground while the rest of crypto is getting a big reality check. So as we wrap up today's video, remember, Bitcoin is sitting in a different category altogether. Banks are using it, ETFs are wrapping it, and Wall Street is building products around it. Probably one of the biggest signs there are in legitimizing Bitcoin. And at the same time, we're seeing institutional flows understanding it, political cycles recognizing it, and it holds the macro role, the essential role that stablecoins, AI coins, and alt layer ones do not fill. So there is no competition. Everything else in crypto right now trades through a new filter. The new questions are, how many users do you have? How much real revenue? Is your token economic model sustainable? And how much of your revenue reaches token holders? And perhaps most importantly, is the demand for your token durable, sustainable? Bitcoin survives because its purpose is simple, immutable, and widely recognized. The rotation happening now is not the end of crypto, so don't despair. It's probably the end if you're holding meme coins or really non-useful pump and dump type tokens, but that's a separate topic. If you're holding real blue chips, many of which I've covered here on my channel again and again, and I will be doing a deep dive just into the blue chip tokens that I believe will do the best and are here to stay in the upcoming pump and into the near future. Right now is the beginning of a valuation reset that aligns the entire space with reality. This is the great crypto repricing. So if you got value from this breakdown, like the video and share the video with somebody who needs to know what's going on. And let me know in the comments section what other topic, what other question you have that you want me to do a deep dive and dedicated video for. I'd love to do that for you. I love you guys so much, and I will catch you here in my video tomorrow. Ciao.